Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis.
Anytime you have any question, any doubt, anything you want, any favors you need, anything I can do to help Japan, we will be there. We are an ally at the strongest level.
President Trump hails the U.S. alliance with Japan, offering the country anything it needs, while praising new Prime Minister Sanai Takaichi for her plans to ratchet up defense spending. The record-breaking equities rally taking a breather in Asia as investors brace for a flurry of big tech earnings and major central bank decisions, including the Fed and the BOJ. Citi Research Head of Emerging Markets Asia Strategy will be joining us with his outlook after a string of Asian central banks have already surprised on policy. And the World Nuclear Association joins us to discuss how atomic energy can help feed power-hungry AI data centers, with demand expected to quadruple. Our top story today, President Trump ramping up his charm offensive in Asia as he meets with Japanese Prime Minister Sanai Takaichi. Trump hailed Washington's alliance with Tokyo and praised Takaichi's plans to increase defense spending.
Received your orders for a very large amount of new military equipment, and you know that we make the best military equipment in the world, the jets, the missiles, and everything else, and hopefully we don't have to use them very much, if at all. But we appreciate that order, and we very much appreciate the trade. We're going to do tremendous trade together.
Let
me share with you my determination. I will continue to strive as the leader of Japan to strengthen Japan's national power, namely diplomacy, defense capabilities, economic power, technology, intelligence, and human resources.
The pair also signed documents on trade and critical minerals intended to formalize some elements of a deal brokered under Takaichi's predecessor. Well, for more, let's bring in our Chief North Asia correspondent, Stephen Angle, who is in Tokyo. And Steve, talk about warm relations and talk about Trump offering Takaichi anything she wants.
Yeah, they clearly wanted to say publicly before the cameras that, all the right things and develop this relationship, which is in its infancy, but is really off the springboard of both of their admiration for the former prime minister, the now deceased, of course, Shinzo Abe, who was assassinated in 2022. Abe was the mentor to Takaichi-san. Donald Trump has often talked very fondly of his friendship with Shinzo Abe. The last time he was in Tokyo in May of 2019, he went to Akasaka Palace, where they are right there, to meet Shinzo Abe. So they built on that springboard, but also, as you rightfully said, signed a couple of documents and deals. In particular, it goes along the lines of what Takaichi-san has been talking about in the leading up to her becoming prime minister, and that is to essentially coordinate more with the United States to counter China's efforts to reshape the global order. And again, this deal on rare earths and minerals that the two leaders signed, there's not a lot of specifics in it right now, but at first blush, it essentially will eventually identify, they'll get working groups together to identify projects where they can jointly invest in critical minerals that are absolutely vital to Japan's tech industry and, of course, America's tech industry, as well as what Donald Trump and the White House has said, other economies as well. So Europe obviously is about to begin negotiations and talks with the Chinese as well about those export controls on rare earth minerals. So that was paramount, as well as sort of goes in lockstep with their discussions about defense spending. That is something Takaichi-san has talked about in her lead up and her candidacy to become prime minister. She wants to kind of resume the mantle of Shinzo Abe, and that is to build up Japan's national defense, accelerate the goal of hitting 2% of GDP in defense spending in a 2-year accelerated time frame. And Donald Trump acknowledged that and was pleased with that. Is it enough, 2% of GDP? But again, they're saying the right things. They're doing the right things right now. Takaichi-san has a very strong mandate in their first week. We'll see how long that honeymoon lasts.
That's right. 2% of GDP on defense spending, music to Trump's ears. Talk to us about what is on his agenda while there. I know that he'll be, meeting with business leaders there in Japan.
Yeah, absolutely. So paramount to that trade deal that the two nations signed in July is, of course, Japan getting, I guess you could call it a fairly favorable 15% tariff rate. But in exchange as well for that honor, Japan is putting together a $550 billion investment fund to invest in the United States. We don't know exactly the ins and outs of that, but one of the other deals that they signed was the agreement that they would have this trade deal as with the centerpiece being this investment fund. So that might be an opportunity for Donald Trump to talk to Japanese business people who might come and say, hey, look, I want to build a plant in America. I want to do this. I want to do that. So that will come this evening. On the defense theme, Donald Trump and Takaichi-san will both head south of Tokyo to Yokosuka, which is the naval base, and they will meet U.S. soldiers and also Japan Joint Force soldiers, I would assume, that are down there near the aircraft carrier, the USS George Washington. And before, again, Donald Trump will wrap things up tonight and then head to Korea, as I will be as well, for the APEC Business Leaders Summit and Leaders Summit coming up in the next few days, and that highly anticipated meeting between Donald Trump and Xi Jinping.
That's right. Happening on Thursday, they say. Steve, thank you so much for that. Our Chief North Asia correspondent, Stephen Angle, in Tokyo. Let's take a look at how markets are shaping up right now. Japanese shares retreating from all-time highs despite the friendly summit. Investors taking profits after the Nikkei 225 crossed the key 50,000 level for the first time on Monday. And Japanese defense stocks, of course, in focus after Trump vowed to be Japan's ally at the strongest level. Meantime, the yen poised to snap a 7-day losing streak. Let's put all of that, all the themes in perspective, in play for markets this week, with investors weighing prospects for cooling trade tensions and a potential Fed rate cut on the table. Break it all down. Bring in Bloomberg MLive strategist Mark Cranfield, also joining us, Rohit Garg, head of EM Asia strategy at Citi Research. Mark, let's start with you. Put this in perspective. Yes, they're taking a breather today, but it's been risk on for a while now. What's behind it? Is it the trade deals? Is it the Fed? Is it a tech rally? What is it?
All of the above. It's a bit of a Goldilocks scenario, and I think people are in the mood here. What investors are seeing is that there could be a nice runway right into year end, as long as the Trump-Xi meeting goes through without any big disturbance. It will just be about focusing on earnings, looking at the Fed lowering interest rates, stable situation in currency markets, oil prices relatively subdued. It's a bit of a Goldilocks scenario. Nobody wants to disturb it. They hope that nobody disturbs it, and that we can just get through this week, and then from then on it will be a nice ride into year end. It is an unusual situation, but you can tell, even though there are signs that in some places there might be bubbles forming, nobody wants to call the top in the market because they still think there's more to come in this.
We talk about there being signs, and there are signs in the bond market in particular almost bracing for a slowdown in the U.S. economy. It's
an unusual situation where you've got most of the U.S. Treasury curve is priced below the Fed funds rate. You don't get that very often. And for it to stay that, it has been that way for a little while, pricing in 100 basis points of interest rates to fall by the middle of next year. And yet nobody's really arguing with it. There's not much pushback at all. And as long as that situation prevails, it gives a lot of stability to other places. So if you're an equity investor and you see, well, there's such calm in the major bond market, why would I worry about, even though valuations might look stretched, I don't need to worry. Big companies are making plenty of money. There's no threat from the major central banks, I'll continue to keep investing in stocks.
And Rohit, of course, the big theme is trade. We have US-China Thursday in focus. If the markets are rallying on the back of that, there's a lot of room for disappointment if things don't go as planned on Thursday.
There could be room for disappointment, but at this point of time, at least given the news flow that we've actually been getting,
Goldilocks, as Mark says.
Yeah. So our base case is that, whatever the trade relationship was between US and China, that will be extended for the foreseeable future. What this really means is that, again, Chinese equities continue to do fine. PBOC, which so far has actually been anchoring the currency. In fact, if anything, they've actually been trying to push the currency a little bit stronger. That in mind actually continues. And then, of course, yesterday we also got the news about PBOC resuming bond buying in China. So that could add another layer of easier financial conditions in China and Asia in general.
You say the best case scenario is status quo. Is that good enough for the market? The market's expecting a trade deal that is beneficial for both sides.
Right. So that was the base case scenario. That was the base case scenario. The best case scenario is that we do get some kind of a maybe respite, especially on the tariffs on fentanyl. But that is not what we are sort of expecting again, as I said. So the base case is definitely the one that has the highest probability, and that has been strengthening given the sort of news flow we've actually got over the weekend. Maybe for the next 1 year, it's all okay.
This is a bit hypothetical, but let's say things don't go that well between President Trump and President Xi this week. Would the fallout be anything like the Liberation Day collapse in markets, or would it be a bit more benign than that?
At this point of time, I have to say that, again, I think the biggest surprise that I've actually had, and this goes a little bit to your point, is that, this was the perfect time in general for U.S. to maybe up the ante on tariff on trades, because risk markets in U.S. have been doing really well. President Trump has been able to collect all the tariffs. Not only have the U.S. equity markets been doing fine, but U.S. bond markets have actually been doing quite fine as well. So this was really the opportunity, but the fact that, President Trump is out here signing deals everywhere, that to me tells me that that's not really in his mind to sort of up the ante over here. In his mind, it's probably that let's make deals, let's actually, as we maybe go into the midterms next year, the focus becomes all the U.S. economy and everything. So, let's have a feel-good factor.
We talked earlier about the Chinese market, that the PBOC will start buying bonds again. This will provide support, will provide liquidity. It becomes more attractive. How are you looking at it?
Yeah, no, I would say that, given the fact that when we look at our headline growth expectations, it's quite clear that 5% this year is sort of achievable. But so far, the biggest surprise has really been that PBOC has not needed to pull any of the big bazookas, when it comes to either the triple R cut or the policy rate cut, or even the government has not necessarily relaxed the fiscal deficit this year, right? So in that sense, and despite that, if Chinese equity markets have been doing fine, but then if you look at the domestic economy in general, when it comes to consumption, when it comes to the property market, that's been so much more underwhelming. So to me, given the external backdrop that we have right now, this was really the opportune time for PBOC to actually come out and announce another round of bond buying, because rates have actually gone back up, and this is a good opportunity for them to ease financial conditions without explicitly sort of tinkering with any of the policy levers.
Earlier in the year, the yield curve in China practically inverted. It was absolutely flat, and looks like it was going to go into an inversion. That seemed to spook the PBOC at one stage. Do you think this has got something to do with them trying to maintain a positive curve, and any relation to what they're doing with the dollar yuan fixing as well?
Yeah, so I think I think whatever you said is absolutely correct. One of the big reasons in my mind that PBOC actually why it stopped bond buying early on this year is precisely because the rally was getting a bit too much, and the PBOC was not really wanting the yield curve to sort of flatten a whole lot, because that would have definitely put a bit more pressure on the investments that banks were actually doing in the form of bond buying. So it has been able to successfully sort of steepen the curve. But at the same time, now that yuan's actually rallying, now that the domestic data has not necessarily been improving all that much, again, the levels are absolutely fine for the PBOC. In any case, if you look at real long-end yields on an ex-ante basis, given the state of the domestic economy, should we necessarily be expecting real rates, to be higher than 150 basis points or even higher than 100 basis points in China's case? I think not. I think so that's why, in my mind, this is probably an opportune time for PBOC to actually come out and start buying bonds.
Okay, so the other trade deal that we're looking at is, of course, with Japan. Two trade deals, the trade deal as well as a deal on critical minerals. When it comes to Japan, it is the yen that is in focus, and that has influence on emerging market currencies here in Asia. Given the weakening yen, how will that play out?
Yeah, so, yen is that, so right now the way that Asian currencies are behaving is that it's a bit of a tug of war that's actually going on. On one hand, PBOC that's actually been anchoring CNY, RMB. That's actually helping anchor rest of the Asian currencies. But we cannot forget the outsized impact that yen can actually have on some of the economies that are more similar to Japan, and which basically then brings into focus Korea, Taiwan, and similar. So I think, to us, what's really happening is that this yen weakness that's actually going on right now, again, we don't necessarily believe that it's going to be a runaway weakness. We still think that maybe yen peaks out, or dollar yen peaks out at 154, 155, but still there is some room for it to actually go, and that sort of yen weakness will seep into weakness in Korean won as well as in Taiwan dollar.
So we've got the Bank of Japan meeting this week. Expectations are pretty low for this meeting. No one's actually expecting them to do anything right now. But clearly there's one more meeting to go in December this year. Is Mr. Ueda, is he going to set it up? Is he going to be actually hawkish during this press conference and persuade people that he really can raise interest rates this year?
I think at this point of time, I think all I would say is our base case is for BOJ to not change, obviously, this week. But then, the rate hike, we are calling for a rate hike in December. I think, given everything that's actually going on in terms of trade deal, in terms of the new government formation and everything, it might be a little bit premature for Ueda to actually come out a little bit more hawkish. So that's why dollar yen is actually doing what's actually doing. But yes, given the inflation backdrop in Japan and everything, as well as maybe this yen weakness does fuel a bit more of inflation worries as such, I think December is definitely light.
So what are the bets? When it might move, and how much it might move, and how is it looking at the Fed? There are lots of questions about what the Fed would do as well. So all that will come into consideration, right?
Yeah. So thankfully, because we are expecting the Fed to actually cut rates this week, that should be another reason as to why maybe there'll be a bit of a cap in terms of limit, in terms of, again, how much dollar can actually move higher, or when dollar yen can move higher. So I guess that would be a bit of a relief factor maybe for the BOJ. But still, I have to say that this is all really priced into the market. I think what we really need to see is, again, what really matters for Asian currencies at this point of time is how aggressive will PBOC be willing to allow dollar RMB to come off. If dollar RMB starts to come off beyond 710, in fact, some of the Chinese onshore media is actually even reporting that maybe by year end we could start to see levels closer to 7. Then that, in my mind, will probably be a bigger anchoring factor for rest of the Asian currencies. And that is something that some of the China's trading partners will be actually quite happy about.
So Scott Bessent says he has a short list of candidates for the Fed chairmanship. He's going to present it relatively soon. I think it's a fairly well-known list. No big surprises in that list. But should investors be taking into account anything specific here for next year, how that will affect policy and all that?
Right. So in my mind, the way that I see things is that, I think the market gets overly nervous, overly worried about who ultimately gets the job. to me, I don't think we should be focused on that thing. What we should be focused is that what really does the Fed end up doing when it faces an adverse set of data that it's not really sort of, that didn't really think about. That is when we need to actually look at in terms of Fed's credibility. But up until then, given the fact that inflation continues to actually be quite soft, despite all this tariff-induced worries, that to me that basically means to me that all the Fed's actually doing right now is removing the restrictiveness, and that should be all okay. I think so that's why I'm, not necessarily worried about who ultimately gets the job or who is the Fed chair, but we need to basically see what the Fed chair and the FOMC does when it faces an adverse set of data that it did not really think about.
Okay, so right now, everything looks okay. That we have the Goldilocks situation. How are you positioning? Which are the most compelling calls for you?
I think for us, at this moment, we are sort of given this tug of war that's actually going on in the in the dollar space as such. Because on one hand, if you zoom out a little bit, go back a few months, one of the key reasons why the dollar was actually being sold was because people were worried that the U.S. is starting to behave like EM. Long end yields in U.S. were starting to grow closer to like 5%, and we've come a long way from them, right? S&P is again sort of outperforming everyone else in the market. So purely from a U.S. asset point of view, the dollar looks to be in a good shape. But at the same time, we have these trade deals being made. We have in general Asia's exports to U.S. that have actually been holding up quite well. Just yesterday, Thailand surprised massively to the upside as well. Despite all our worries about export payback happening at some point of time, that hasn't necessarily materialized, right? And now PBOC is sort of trying to allow a bit more of RMB strength. So we are in a bit of an unstable equilibrium over here as far as sort of the FX complex is concerned, and that's why what we are really focused on a bit more of idiosyncratic factors within Asia. So when it comes to idiosyncratic factors within Asia, there are 2 or 3 things that we are focused on. Number one is short Sing near. That's quite clear to us because the way inflation trajectory in Singapore is sort of evolving and the levels of forward Sing near, that to us is quite clear that one should actually be playing for a bit of a Sing dollar weakness against the near basket. It's a really good carry trade, a high Sharpe ratio carry trade. The other thing that we still very much like is basically a bit of a Thai baht weakness, and that is something that again policymakers in Thailand have actually been trying to sort of push back or stem the Thai baht strength, and now that gold's actually come off a fair bit, that should be aiding a little bit of Thai baht weakness as well.
Quite interesting, the correlation between the two.
Yeah, it's a mysterious correlation, a make-believe correlation, I believe, but anyway. And then from a positive side, I would say that yes, RMB strength is something that we've actually been focused on. We did initially have a bit of a long RMB position, which we took off, but then now we are again starting to see how export conversion ratios in China have actually been sort of gone up in September, and the current backdrop sort of does allow a bit of more of an RMB appreciation.
All right, Rohit, hang tight. MLive strategist Mark Cranfield, thank you so much for your time with us today. Rohit Garg of Citi Research is sticking around as we take a closer look at the outlook for Asian EM currencies. Keep it here with us. This is Bloomberg. Well, we've seen a massive rally in global equities, setting the S&P at new record highs. But take a look where futures are pointing to. Taking a breather from that record rally, investors bracing for a flurry of earnings from mega-cap technology companies and policy announcements from major central banks this week as well. S&P futures pretty flat right now. NASDAQ futures just trying to eke out a little bit of gains right there, of course, on the back of that record-setting advance in global equities. Right now, taking a breather. In terms of those Asian benchmarks, also taking a breather. MSCI Asia-Pac Index down about 0.1%. We have the TAIEX also lower. The Kospi down the most right now, down about 1%, of course, against a backdrop of Trump in Asia, expected to be in Korea in days ahead for that APEC meeting. Coming up, South Korea's pledge to invest $350 billion in the U.S. is sparking concerns about the impact on the currency. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside. More and more Koreans are shifting the money into U.S. stocks and gold as concerns grow that the won could be headed for a downward spiral. The anxiety stems from South Korea's pledge to invest $350 billion into the United States. Let's bring in Bloomberg senior FX and rate reporter Ruth Carson. Ruth, I mean, we're talking about currency that's down about, 3% over 3 months? A slew of issues, domestic concerns, one of them.
Absolutely. The won is one of the weakest major currencies in the world, actually, if you
Not
use
just
the
Asia.
No, absolutely. On a major currency basis, the Korean won is probably the second worst performer in the world. And yes, absolutely, that $350 billion pledge by Seoul to the US is sending shivers down not just investors, the institutional investors' spines, but also the retail investors. And that is definitely weighing on the won and will continue to weigh on the won going forward.
So how much lower can it get? I mean, that's a big question, isn't it?
Absolutely. I think it's incredibly important to look at capital flows here. And what's fascinating to watch is from a retail investor perspective, there is a record amount of buying of U.S. assets, stocks in particular, by these so-called Korean mom and pop investors. That is actually weighing on the won, and it's something that has caught the Bank of Korea's attention as well, and will continue doing so. Now, where the won is headed from here, let's see where the talks go over the next couple of days first. How about that?
But the thing is, institutional investors are looking at it another way, right? I mean, if you take a look at the stock market, they're piling in.
Absolutely. Now, the Kospi has actually gone up more than 60%, I think 70% this year alone, which is amazing when you even compare that to, say, the Nasdaq. But the retail investors are not buying it. They are so terrified that the won is going to continue plunging in their minds that they're just going to buy the USA. So let's see who wins this tug of war.
All right, Ruth, stick around. Let's continue the conversation and bring back Citi Research Head of EM Asia Strategy, Rohit Garg. And Rohit, I read an article. One domestic investor, a retail investor, actually said, the won is like paper money. The value will keep going down and eventually it's not going to be worth anything. What's your take on that?
Ultimately every currency is a reflection of, what flows that currency is seeing from a current account as well as capital account perspective. The thing that's actually been ailing won so far has really been that even though Korea registers a $50 to $55 billion annual current account surplus, but the capital outflow just overwhelms this, right? You look at these numbers, the pension fund of Korea, investing buying about $20 to $25 billion of overseas assets. And then, of course, more recently, retail money that's actually been chasing overseas assets, both bonds as well as stocks. That actually means that even for this year, for instance, the capital outflow has actually very much surpassed the current account surplus. And we haven't even spoken about, the fact that, Korea has actually is going to be investing, $200 or $350 billion worth of, money in US. So when you have these kind of numbers, it is understandable as to why won would actually continue cheapening. And then don't forget, I just mentioned about the yen weakness as well, and then the correlation that Korean won exhibits to yen. So all of those factors, do actually tell me that at least for now, the Korean won will still continue to weaken, and we really need a big, I would say, hammer or a flow that happens on the other side, similar to probably what we saw by the end of last year in the form of that strategic FX hedging that NPS undertook that actually then helped bring, dollar won actually down.
And Rohit, it's interesting to see when we run the FXFC function on the terminal that the majority on aggregate of forecasters expect a stronger Korean won next year. What's your take on that?
No, I think it's at this point of time, I would say expecting a stronger Korean won is not something that we are expecting either. And again, it goes back to the sort of capital outflow math that I sort of spoke about. I think the only way Korean won can sort of rally from here on will have to be, a significant amount of dollar weakness, or in other words, that significant dollar weakness either sort of comes about either due to a, massive euro rally or a yen rally or a RMB rally or just a combination of all of these three. Because apart from that, the capital outflow picture for Korea is just still a pretty big picture, and it's a one-way picture.
I'm just wondering, can the BOK do anything? If the retail investors are pulling the money out and buying U.S. assets, I mean,
right.
What can the BOK do?
That's the valid point. So far, BOK hasn't really done much. There have been some periods of maybe, trying to slow down won weakness through an active intervention. But I think so far, BOK has been a lot more hands-off. And this is a policy that they've actually generally sort of adopted, unless and until things really get out of hand. I think at this point of time, given that, what are the reasons as to why you would actually sort of intervene in the currency market? Maybe, you're worried about financial stability, you're worried about imported inflation side of things, or maybe it's a combination of these two. But both of these factors right now, not just for Korea, but for most of the world, is really a little bit absent. So that's why, I'm not really surprised as much that, in general, BOK has really been a bit more hands-off in Korea's case.
So what do you see the BOK doing in the next 6 months? I mean, in terms of its policy?
Just like last year, because BOK continue to be very much hands-off, I would say that this is probably going to be the case this year as well. And, we continue to sort of see this particular currency band wherein, we would expect, the strategic FX hedging by the NPS to again get triggered somewhere around close to 1460, 1470 levels. And that, at that point of time, should actually be a good enough, sort of a catalyst for the won weakness to actually sort of slow down a little bit. That's number one. Second is, don't forget, next year Korea is also going to be included in the WIGB index, and the amount of inflows that we can actually sort of see in a passive fashion to Korean bonds would be to the tune of $50 to $60 billion. And again, that should come as a welcome relief in terms of the capital outflow picture as well. So I guess because we're not really all that far away, I would say that BOK will probably still continue to be hands-off and will rely probably on these other two factors to sort of stem Korean won depreciation.
Now, Rohit, the other side to the emerging market currency debate is obviously the dollar and its path going into 2026 and beyond. What's your take on the de-dollarization debate and the dollar's path into next year?
Right. No, that's a very interesting question. So, again, when you think about, where did the dollar de-dollarization or de-dollarization concept really came from, or the need came from, that need came from, various political factors that were sort of prevalent, in March or April of this particular year, especially maybe, concerning bills 899 or 889, I forget the number exactly, but those concerns have now been sort of pushed back, right? That's number one. Second is there were concerns that maybe, U.S. long-end yields are getting a little bit unanchored, unhinged. So maybe there's a need to actually reduce that sort of, or risk manage those sort of concerns. But again, if you actually see now that the 10-year is actually close to 4%, those concerns have actually gone away. So to me, purely from a U.S. point of view, the de-dollarization narrative, just looking at how U.S. is actually sort of moving from an asset point of view, that need has actually come off. In fact, in various client conversations that we've actually been having so far, people, clients have actually been wondering that maybe we shouldn't really have questioned U.S. exceptionalism. It's sort of now back. So and then when we actually look at some of the investor behavior, that sort of could have actually pushed this de-dollarization narrative, which is basically either the corporates or the institutional real money. I would say that yes, institutional real money was in the forefront of dollar hedging, since April of this year. But our more recent sort of numbers that we are actually seeing is that institutional money is definitely pulling back on those hedges or not necessarily rolling them over. That's number one. Corporates, on the other hand, have actually been incredibly interesting. When we actually look at the corporate behavior post-April, and pre-April, what we notice is that the only country where we've actually seen a bit of change in corporate behavior is China. China is the only place where we've actually seen corporates sort of hedge a bit more. But in all other countries, I have to say, we have not really seen any change in corporate behavior. You look at dollar deposits in Malaysia, Thailand, all other countries, they've actually continued to go up.
Rohit, it is not just the one that is in trouble. The Philippine peso is just gone past 59 to the dollar, which is a new record low. What are the prospects? It just keeps, getting hit more and more.
Yeah, I mean, peso weakness has definitely gone a little bit, excessive in our minds.
Oversold?
Oversold in our mind, definitely. Purely looking at how peso on a nominal effective exchange rate is sort of behaving versus Philippines' terms of trade, one can actually see that the gap over there is humongous. So that's why, just this morning, in fact, we actually sort of recommended to our clients to sort of, start looking at trading peso from a long side for 2 or 3 reasons. The biggest rationale is that we have a very favorable seasonality for Philippines actually coming up until the end of the year, wherein all these remittance flows actually pick up, and that sort of helps in peso appreciation. But more importantly, valuations, as I said, are incredibly cheap. And then more from a medium-term perspective, although this might be a little bit counterintuitive, but given the fact that there is a big corruption probe that's actually going on in Philippines, what we are actually seeing is a bit of this government spending actually slow down, a bit of the infrastructure spending slow down, and when this infrastructure spending slows down, it would naturally lead to lesser amount of imports, or capital imports, or raw material imports. So that should also sort of lead to a bit of a, I would say, anchoring of Philippines trade balance as such. But that's more of a medium-term stuff. But the more tactical thing that we are looking at is just basically the seasonality and the valuation.
And what's your take on the Indian rupee, which is also weak? We're talking about a lot of, weakness in emerging market currencies.
Interesting, those weaknesses are all showing up really more in the current account deficit countries and the high-yielding countries. But anyway, going back to INR, I would say to us, it looks like the tail risk for INR has actually gone away a little bit, given the fact that, there are a lot more positive headlines around the negotiations between US and India. That to us, means that, beyond, 89 is sort of a difficult proposition. That's number one. Second is, of course, RBI has also come out pretty strongly in terms of intervention, and of course there were, quite a bit of media headline, articles around that thing as well. And third is that, more recently there have also been a string of FDI announcements into India's financial sector. And then, of course, don't forget that, January to March is also a very seasonally favorable quarter for India from a current account perspective as well. So I guess we are sort of, again, yes, INR could actually sort of still move around quite a bit. But at this point of time, I think we believe that, 89 for now should indicate a short-term top for dollar INR.
All right, 89. Bloomberg Senior FX and Rate reporter Ruth Carson and Citi Research Head of EM Asia Strategy, Rohit Garg. Now, we'd like to alert you to Domino Pizza's Enterprises saying no proposal, no talks with Bain. Domino's jumping earlier in Australia on a report that Bain is weighing a deal. Trading resumes in Australia again. Domino's Pizza Enterprises shares had soared after the Australian Financial Review reported Bain Capital is considering buying the fast food chain in a deal worth as much as $2.6 billion. Now, coming up, the AI boom is driving renewed demand for nuclear power. We'll discuss what this means for the industry with World Nuclear Association Director General Sama Bilbao y Leon. Keep it here with us. This is Bloomberg. Welcome back to Insight. Google has signed a deal with NextEra Energy to supply power for its U.S. data centers from a restarted nuclear plant. NextEra will start delivering power from the Iowa plant by 2029 under a 25-year agreement with Google. Building nuclear power plants to fuel the energy demands of the AI boom can take years, but reviving closed facilities is emerging as a faster option. Let's discuss this growing AI power demand with our next guest, who has more than 20 years of experience in nuclear engineering and energy policy. Sama Bilbao y Leon is Director General of the World Nuclear Association, which promotes atomic power and supports companies in the global industry. Good to have you with us, Sama. I mean, is nuclear then the answer to powering AI data centers? Is that the sense that's coming out today?
Well, certainly technology companies are looking at 24/7 electricity that is carbon-free. So they don't have too many choices. Nuclear energy is definitely one of them. But as you know, there is no single bullet that makes all the solutions. But let me just say, it's not just data centers. The heavy industry is also looking at nuclear energy to provide not just electricity, but also heat, process heat for metallurgical or petrochemical or chemical facilities.
How receptive are governments to the idea of nuclear energy? I mean, bearing in mind what we've seen in Fukushima, for instance, that's still fresh in people's minds.
Mm-hmm. Well, we have seen an enormous change in the perception of nuclear by the public, but very importantly, governments. Governments, when they are looking at meeting Paris Agreement goals in a manner that is timely, cost-effective, and definitely equitable, they are reconsidering nuclear. They are looking at the existing fleet as essential, something that we need to extend their life as much as possible, but also we are looking at new nuclear. We really need to keep up with the growing demand for energy.
So governments are for it?
Yes.
Companies like Google are for it. So are we expecting more such deals, like the deal signed by Google, you think? In what sense?
Yeah. No, we are seeing, I mean, in the U.S., well, you mentioned the Google with Google and Nexera, but Microsoft and Constellation had a similar deal. And then we have deals with Google, with Kairos Power, with I think it's Meta, Amazon together with X Energy. So there are many of these deals that are looking at nuclear energy and AI and technology. But as I said, X Energy also has a deal with Dow Chemical. So it is much more than the AI companies.
But the thing is, we're hearing U.S. companies more into it. I'm just wondering if that is being, I guess, replicated here in Asia. Are Asian companies also doing the same, expected to do the same?
No, we are seeing similar partnerships being everywhere else. So in Japan, we have seen technology companies, data centers looking at getting co-located with the nuclear power plants. In Southeast Asia, many countries are looking at, hosting a lot of data centers and technology companies, and for that, they do need 24/7, hopefully carbon-free electricity.
You talked about earlier that there's no silver bullet. So it is not just nuclear energy that's going to, solve everybody's power problem.
No.
If you take a look at the contribution of nuclear, realistically, by 2030, how much of that power can nuclear provide?
Well, today nuclear energy provides 10% of global electricity, and what we are trying to do right now is to maintain that 10% of global electricity moving forward. Obviously, this is different in different countries, right? So France has more than 75% of their electricity coming from nuclear, or Czech Republic have 50% and things like that. So again, as we said, it's not silver bullet. Some countries will have huge percentage of their energy coming from nuclear, and some countries will have none. Well, they will have to decide what is their perfect energy mix.
So some countries will have none. That includes the likes of Germany, which has a moratorium.
Well, I don't know that they have a moratorium. They decided to shut down their nuclear power plants, and I think that the current policy is like they are becoming. They have questioned whether that was a very good decision. But if you look at most other countries in Europe, they are number one extending their life of their current units for as long as feasible, and we are seeing many new nuclear projects in Europe: Sweden, Finland, France, the Netherlands, Czech Republic, Slovakia, Romania, Poland is a newcomer country, Bulgaria. All these countries have new nuclear power plants in addition to their existing power plants.
How do we ensure safety? When we talk about the insatiable appetite for power, for data centers, it includes both domestic, developed and developing economies.
Absolutely.
How do we ensure safety, especially in developing economies, to ensure that, the standards are observed? How do we look at it?
The nuclear industry country, we have a very good track record, a historical very good track record. We have very good standards, and as a community, we work very closely together to learn from each other, to make sure that we always are taking and adopting the best practices and the lessons learned. And this applies for existing countries and newcomer countries. And frankly, the way I look at this is not whether the countries are developing or developed, is whether they are newcomers or not. And we are seeing that the global nuclear industry kind of pulls together to help these countries. We saw this in the United Arab Emirates. As you know, there are newcomer countries that they just joined the nuclear industry in the last 10 years. Or Bangladesh. Bangladesh will start their first nuclear power plant before the end of this year. So the entire global industry has worked together with them to ensure that they are ready for this.
In Asia, who is setting the pace when it comes to nuclear energy adoption? Is it China?
Well, China is definitely setting the pace, not just in Asia, I would say at a global level. As you know, China is building currently over 20 reactors of different technologies, large, small, advanced reactors. So China is definitely moving ahead very quickly. I would say that South Korea is also a growing power. They are building nuclear power plants in the country, but they are also contributing to projects elsewhere in the world, in Czech Republic, in the UAE. And frankly, Japan obviously has a long history of being a very good nuclear operator, as well as India. As you know, India has existing very good indigenous nuclear industry, and they are looking to actually grow in that capacity very quickly.
What is it that China is doing that's allowing it to lead the pace?
You know, it's very easy. When you do something and you do it over and over and over and over and over again, you become very good at it. And this is what China has been doing. For the last 20 years, they have adopted the technology. They are standardized their supply chains. They have their workforce. Their entire industrial infrastructure is set so they can replicate. It's not one project. It's a program. It's a fleet. And this is basically what we are trying to redo everywhere else in the world, right? So for perhaps perhaps decades, we haven't really built too many nuclear power plants in many other parts of the world. So what we are trying to do is create or recreate these capabilities to be able to move to programs, not individual projects.
So what's the call to action? What do governments in Asia in particular have to do to ensure that, they have this nuclear energy they need to power the countries?
Well, I think that Asia, in particular Southeast Asia, we are in a fabulous position to actually grow nuclear energy very effectively, because in many Southeast Asian countries we have some expertise with research reactors and use of nuclear energy or nuclear medical applications. So it's a matter of expanding that infrastructure into regulatory infrastructure to actually use all the industrial capabilities that do exist in the zone into nuclear-specific industrial capabilities. And then, of course, partner with the experts, whether it is U.S. or China or Korea or many other potential players.
Quite an area to be looking into, a growing area, this appetite for energy. Sama, thank you so much for that. Sama Bilbao y Leon of the World Nuclear Association. Now, before we go, here's a look at tomorrow's show. We'll get fresh investment insights with BNY's Global Head of Markets. That's as traders continue to keep an eye on trade developments and await the latest rate decisions out of the US, Europe, and Japan. And starting next week, by the way, Insight is expanding to 2 hours of live coverage. We'll bring even more of our crucial insights and sharp analysis, including a spotlight on India's growing economy. That is it for Insight. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.